Crypto is getting very interesting because we're finally starting to see the bear of regulation coming into play. And I think long-term, that's a good thing. Crypto itself is not the bad guy. Crypto is just software code. It's not the software code. It's all of these rogue players and these unregulated exchanges and the issuance of all these meritless tokens, the token on the exchange, all of this crap, if I excuse my French, it's all going to go away. Remember, the one thing about Bitcoin is it doesn't trade in any one geography. It trades around the world 24/7. You're going to have to be passported, regulated. And that way, if you go offside in any market, they'll pull all your licenses. And then you no longer have access to getting cash in and out of banks. That's how I think they're going to do it. I'm not putting it on an unregulated exchange anywhere. Forget it. Never again. I mean, the problem is the consumer is still flush with capital. Wealthy U.S. Consumers, Asian consumers, Middle East consumers have an abundance of free capital. There is inflation, which makes them want to buy hard assets across the board, whether it be high-end pens, watches, cars, art. The auctions are still very, this is a very unusual recession, if indeed we are in a recession, because you've got so much capital still on the sidelines, over $4 trillion cash. So worldwide. And so, this is not your grandfather's recession. Plus you have full employment right now. And the Fed, the big debate is what is the terminal velocity of that interest rate? Is it going to be 5? Is it going to be 5.1, 5.2, 5.3%? We just don't know yet. Rates are down today after the latest data. So, there's a disconnect between the Fed pounding the table saying we're going to keep raising rates and what long-term bonds are doing. They don't believe them. And so, it's a very unusual situation. The Fed can keep making noise, but it's not working yet. And certainly it's a tight labor market. I'm always concerned with the Fed's doing. I can only watch what they do and then try and determine how I'm going to put capital to work based on what they do, not what they say. Now, one thing about that data, that CPI data, and lots of other analysts are talking about this, the housing data has rolled over in there and it's not reflected properly in this CPI 6.5. The real CPI, if we actually were to take true pricing of housing in major markets in the US, whether that be semi-detached, rental units included, standalone homes, certainly office and industrial space, that has rolled over, and it is representing a too high an inflation rate inside the CPI because the data they use is 11 to 18 months old. So that's why you're seeing this disconnect in the bond market. Anybody that buys bonds, a fixed income balance sheet investor like me, knows exactly why these spreads have tightened, particularly on triple B credits. They don't believe that inflation is actually 6.5%. Inflation may be as low as 5% right now if we were to true up the data from the housing market. Cash right now on our cash desks, we have cash to put to work. We're picking up 3.2 to 3.8%. So it's a sort of see and wait. I have been going back into the crypto markets lately. Anytime Bitcoin drops below 17,000, I add to our positions there. Crypto is getting very interesting because we're finally starting to see the bear of regulation coming into play. And I think long-term, that's a good thing. These hearings in the Senate have really poked the bear, as I like to say. And I participated in the last hearings. And when I had a chance to talk to the people on the Hill, or the lawmakers, I sensed that they're frustrated now. They're tired of putting these hearings on every 6 months, every time one of these crypto company blows up and goes to zero. They're so unregulated. These unregulated exchanges are just, they're all going to go to zero. And what's going to come out of it eventually is going to be a regulated crypto market, which I think will be very interesting because there's real merit. I mean, crypto itself is not the bad guy. Crypto is just software code. It's not the software code. It's all of these rogue players and these unregulated exchanges and the issuance of all these meritless tokens, the token on the exchange, all of this crap, if I excuse my French, it's all going to go away. No, I agree. There's always going to be fraud. The problem is, let me give you an example. Let's talk about tokens based on, we don't even have to mention what exchange, but All the large exchanges, the unregulated global exchanges, incentivize account holders and users to buy their tokens to get discounts on trading fees. It's not new. It's been going on for years. And then they put them on their balance sheet at a ridiculous valuation. And if you look at actually who owns these things, 97% of them are owned by the issuer. You don't know who that person is because it's simply a wallet without a name on it. And the other 3% are valuing it at 60, 70, 80, 90, 100 billion dollars. Now, if there's a cash run, a cash call back to fiat, back to US dollars on $100 billion, you know that exchange is going to fail. And that's exactly what happened to FTX when a rogue player said, I've got $550 million worth of FTT tokens and I want cash by noon in 3 hours. Well, of course they don't have 500 million cash. None of them do. It's a very simple regulation. You can't do that if you're a bank. You can't force people to buy your shares just to open an account. That's ridiculous. Or incentivize them with discounts. That's illegal. All I'm saying is set some rules up, and I think this is going to happen. And I'll tell you how I think this plays out. A passport system is going to be launched by regulators in major markets, US, Canada, Switzerland, United Arab Emirates, South American markets. And they're simply going to say, look, if you want access to the fiat cash in the regulated bank accounts in this geography, in this country, in this market, you have to be compliant to this passport. And they'll all have the same rules. And if you want to operate, because remember, the one thing about Bitcoin is it doesn't trade in any one geography. It trades around the world 24/7. You're going to have to be passported, regulated. And that way, if you go offside in any market, they'll pull all your licenses. And then you no longer have access to getting cash in and out of banks. That's how I think they're going to do it. I'm speculating when I say it, but I think you're going to hear more hearings in the Senate and more of this reining in the cowboy rogue nature of what this has become. It's got to end. People are tired of losing all their money. And frankly, I think regulation doesn't have to be, it's not going to change fraud. It's just going to make it much easier for people to understand what the rules are and get rid of the rogue players. That was my assumption, and I was wrong. Their staff have become very intelligent.
Okay.
The Justice Department getting far advanced. The SEC, they really understand what's going on. They just haven't had agreement on who the regulators should be. There's a turf war going on and who should actually regulate. But there will be some regulation. There's no question about it. And I think, the Toomey hearings prior to when he retired on Jan 3rd, and now it looks like Haggerty may pick up the baton. They see the merit of digital payment systems and cryptocurrencies, but they want it done in a regulated environment. And I think that will continue. And they'll continue to educate themselves, and the hearings will continue. But I think it's all upside from here. And eventually, institutions want to buy this stuff, and they're not buying it yet. For all of the noise about institutions coming in, they own nothing yet. Zero. I'm not worried, but if you're asking me, will there be another meltdown to zero? Absolutely. 100% it'll happen. And it'll keep happening over and over and over. Well, all of these exchanges, all of them, all the unregulated exchanges are having massive outflows right now. The smart money has got the joke. They saw what happened at FTX. They're not sitting around for an explanation. And if you're not willing to be audited, and I'm speaking about any exchange, if you don't have an auditor, you don't want to be transparent, you don't want to disclose ownership, why should institutional capital stay there? Of course it's not going to. And frankly, it's very hard to find an auditor that wants to touch this stuff right now because of an unregulated cowboy environment. It's all going to end. And yes, there'll be many more zeros. The only place I have any crypto right now is up in the Canadian market, which is 100% regulated. I'm not putting it in an unregulated exchange anywhere. Forget it. Never again. And they get audited up there. And so, frankly, if you're sitting around trying to get me to buy a token from an exchange to get discounts on trading, that stuff's garbage. And I think we may have those rules one day. We just have to treat crypto like any other asset that's regulated. And I think that will come. No, it's not going to happen. The reason that won't happen is as long as you have a completely unregulated, decentralized version of money, you're going to have people ripping you off. And that's what people have got a taste of. There's so many rogue players that want to take advantage of people on these decentralized platforms. Doesn't mean decentralized doesn't work. It means we need to have much higher security at the wallet level, more transparency. In the FTX case, you can go to your account, you see nothing there. It got completely scraped. So nobody trusts these systems yet. They want regulation. They want transparency. They trust the banking system, not the crypto markets yet. And so this idea that, that you're for decentralized and you're a rogue cowboy and you don't believe in government works until you find out you lost $50,000 in your account. Listen, people have that attitude. If you want, you can go live in a cave with your dog and a rifle and some beef jerky. That's fine. I choose not to do that. So what I do is that I play by the government rules and I buy assets that protect me against inflation, like watches, like gold, like equities that are profitable companies. I mean, that's what I do. And I think that those rules have been established for hundreds of years and they work. So we're in a period of inflation. You've got to actually adjust what you're doing with your capital to protect yourself and protect your buying power. I buy real estate as well. There's all kinds of things you can do, and you can do them in a regulated environment. I just think that this nascent crypto industry has ripped off so many people. I saw a stat the other day. In the last 36 months, 80% of the people that participated in crypto as investors have lost 82% of their capital. I rest my case, Your Honor. 5% weighting in gold. I have a 5% weighting in Bitcoin. That's actually been performing quite well, even with all of these scandals and everything else. I've got a large allocation to equities. No equity more than 5% more, no sector more than 20. So it's very diversified. And I have a lot of cash on hand right now because of some sales I made last year before some of the taxes went into effect on share buybacks. So I'm actually shopping to put more money to work, and I'm doing it. Looking at private equity, all kinds of new alternatives are emerging. And so the whole idea is my job is to get up every morning and put capital to work and find the path of least resistance. My bogey is to make 6% a year. Doesn't sound like a lot, but it's not easy. And so when you think of a broad portfolio, to distribute 6% cash, that's not easy to do. But I've been very fortunate in the last decade or more, and I've been able to do that.